Warren Buffett, often called the encyclopedia of investing, has built enormous wealth, not only for himself, but also for millions of investors who trusted him through Berkshire Hathaway. So here's the big question. Why is Warren Buffett sitting on $334 billion in cash? That's not just a large cash reserve. It's the biggest cash pile Berkshire Hathaway has ever held. Is he seeing something that most investors are missing? Buffett is not a day trader. He doesn't react to daily market noise. He thinks years ahead. That's why many investors pay close attention to what he does, not what he says. History gives us an interesting pattern. Berkshire held around 21% of its assets in cash. The dot-com bubble burst. The S&P 500 fell nearly 49%. Cash levels rose significantly. Then came the global financial crisis. The S&P 500 dropped about 57%. Buffett entered the COVID period with substantial cash reserves. Markets plunged 34% in just 33 days. Berkshire now holds approximately the largest cash position in its history. Coincidence? Maybe. But one thing is certain. Buffett doesn't try to predict crashes. He focuses on pricing risk. When he believes assets are overpriced and cannot find businesses worth buying at current valuations, he stops buying and waits. The cash itself becomes the signal. Today, stock market valuations remain near historic highs, and Buffett has been a net seller of equities for multiple consecutive quarters. For more than 60 years, Buffett's discipline has helped him avoid chasing market euphoria while others got carried away. So the question is $334 billion the most important number in financial markets right now? Or has Buffett simply run out of opportunities large enough for Berkshire Hathaway? More importantly, how do ordinary investors protect themselves if markets become volatile? One approach is diversification. Some investors choose to hedge traditional investments with select alternative assets that have their own intrinsic value, scarcity, or independent demand drivers. The goal is not to eliminate risk, but to avoid having all wealth tied to a single asset class. No investment is completely immune to market stress, but diversification can help reduce concentration risk. So ask yourself, is your entire portfolio dependent on one type of asset, or do you have exposure to different sources of value? What do you think? Is Buffett's record cash position a warning sign for Indian markets too, or is the situation completely different? Tell us in the comments below.